Go interactive with X-Ray, where we bring trading experts to you live in the platform. Choose sessions, watch live market analysis, and catch up on your favorite market insights anytime. Ask questions and go one-to-one with leading experts on gold, oil, FX, crypto, indices, and equities. X-Ray, your very own analysis team, right at your fingertips. That's higher trading from MarketsX. Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
What's happening, beautiful people? Good morning, America. Good afternoon, Europe, and welcome everyone to the Markets Pulse. We're exactly 30 minutes ahead of the US markets open, and today we have a very, very hot topic, guys. Brent oil has started an uptrend back in October 2020, and it didn't stop since. OPEC pulls back on production. Russia wants to open the tap. How is oil priced, and what's expected from it in the near future? More on this topic in just 1 minute, guys, when we're going to have Richard Rawlinson joining us, Global Client Champion at Markets.com from the sunny London. Stay tuned.
Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for market information. That's higher trading from MarketsX.
Right, happy Tuesday, beautiful people. And as promised, from the heart of London, Richard Rawlinson, Global Client Success Specialist. How are you, Richard? Good afternoon.
I'm very well indeed, Andrew. Thank you very much for having me.
Always a pleasure, always a pleasure. Thank you for accepting the challenge. Now, Richard, you shared a very, very interesting article on LinkedIn this morning on Brent oil and pricing as well. Could you bring some light on this matter, please? What is happening behind the scenes of supply and demand?
Yeah, I'm glad you mentioned supply and demand, Andrew, because in most fundamental economic principles, people think supply, demand, equilibrium, we have price. It's not as simple as supply and demand within Brent specifically. It's actually called the Brent complex. So the very word itself would suggest it's not as simple as supply and demand. Brent, otherwise known as Dated Brent or North Sea Dated or the cash BFOE, it's currently priced and based on the lowest grades. Now these grades, and this what I call BFOE, it's actually BFOET now. These are 5 oil fields in the North Sea, which are Brent, Forties, Oseberg, Ekofisk, and Troll. And what it looks at is it looks at the loading dates within the North Sea terminals from the next 10 to 45 days. And what happens is they come up with this wonderful price. And what's happened recently, the major change, this is huge news for the oil trading industry, is that the major global reporting agency, Platts, you all probably know, Standard & Poor's S&P Global Platts, they wanted to convert this key Dated Brent benchmark into including a Rotterdam benchmark, which would therefore incorporate US WTI. Fundamental change, huge change, industry uproar, Andrew.
Right. Okay. Sounds complicated. I know you worked as an oil broker many years ago, so obviously you know more about this than most of us. How is oil priced, Richard, behind the scenes?
Well, yeah, it's exactly what I say. So you take those specifically in the North Sea. WTI is relatively simple. We can look at inventory analysis. We can look at what's available in Cushing. You can look at the, tank top storage within the SPR, the Strategic Petroleum Reserve. But within the Dated Brent complex, It takes into account all these oil fields and it measures the different grades and blends within that oil field. And what, as I said, what the S&P wanted to do was start to incorporate I think it's these, as opposed to the FOB, they want to incorporate the CIF Rotterdam, which meant, sorry, I'll close that one down. They wanted to incorporate, this is actually only going to happen in July 2022, I should let you know.
Right.
But they wanted to incorporate it all the way to Rotterdam, which would have included freight charges. So instantly, there's going to be, it's not just the price of oil anymore, it's the price of oil plus the extra additional charges. Anyway, good news for oil traders out there, or good and bad, I guess, because at the moment, nothing's changed. We are keeping it as is, but I just get the impression, certainly after Platts leading this charge, that there will be considerable change within the oil trading Brent complex and the mechanisms as to how it's priced going down the line.
Right. Okay. So what's the industry thinking about the oil price and its direction in the near future, Richard? Apart from this morning, what's the latest insight on oil?
So, I mean, from an industry perspective, I'll just go on to this assessment again. The industry didn't particularly like this. We have billions of contracts, billions of dollars worth of contracts, which are trading on exchanges. They're trading bilaterally. There's derivatives everywhere for all the different parts across the barrel. And it was actually Argus Media that had to report last week that a new DFL, which is called a new Dated-to-Frontline contract and instrument, had to be created by Platts and ICE in order to allow these markets to function. So what does the future hold? As in anything, the only certainty is uncertainty. But there was one major player called Trafigura they've come up with a different suggestion. They've suggested, and I quote, the issuance of loading programs for WTI crude in the Gulf Coast in order to maintain this FOB nature, this on-board nature. So we have Super Thursday coming up this week.
Yes.
We've got a multitude of things from the Biden administration. He's only been in 60 days now. He's promised to prioritize climate change on his campaign trail. He's actually taken relatively swift action. In the first 60 days, he's halted new oil and gas leases on federal land. He's cancelled the Keystone pipeline. So what is ahead? Certainly uncertainty. Price-wise, these are my own personal views. I'm looking out the window here. You mentioned sunny London. It's got blue sky. I wouldn't call it sunny, Andrew. But I would suggest, there's still not many planes in the sky. There's still not many cars on the road. Excuse me a second.
No worries.
So what I think we need to look at as well is the API and the EIA stats that come out weekly. So that's the American Petroleum Institute and the Energy Information Administration. And what you might see is either you're looking for a build or a draw. A build simply means that more product has been produced and put in storage than used. And a draw means they have pulled out more storage, pulled out more barrels from inventory than we've used. I've been quite surprised of late where there's been some crude draws, which, again, there's not many cars on the road, planes in the sky. There's a lot of freight. There's a lot of shipping being used. Obviously, I don't want to quote major online retailers, but we've all bought a lot off the internet lately. So they've all got to get to your door through some form of oil, gas guzzling transportation mechanism. But I still think we're a little toppy. I still think we're seeing a slight dislocation between the futures and the physical price. We've had China that have mopped up lately. They've been filling their own SPR as well. So my personal opinion is I think we're a little high on the price at the moment to justify demand. There was an article that came out the other day that said second half demand will be higher than the first half. Well, I think that's fairly obvious, right? I've not left my house in weeks. I'm at my mum's house at the moment. Excuse the 1970s wardrobe. I agree. In the second half of the year, I do think demand will come back up. We've seen rig counts that were about 610 last year go all the way down to the low 200s, maybe even the high 190s. That's now back up to about 310. So with this $65 to $70 range, I think you might see more production coming back online because it's more financially viable. But it's just not the case of turning the taps on, Andrew, with oil. It's not a light switch. There's an awful lot of infrastructure and capital needed in order to stop start.
True. Talking about that, a couple of weeks ago, if I'm not mistaken, either JP or Goldman upgraded oil this year for about 75, which
75, yeah.
so talking about that, let's have a quick look at the charts. Okay, we're looking at the charts on a daily chart, and we can see oil's performance since January 2020. At the moment, okay, on your beautiful charts, there we go. Okay, at the moment, we're looking at 100% correction on the Fibonacci retracement with a double top that we see there towards the right. Yeah, which usually indicates a potential weakness in the trend. So again, I was surprised by the low demand. The demand, and correct me if I'm wrong, might have picked up in the last month or so due to a heavy winter in the U.S. Yeah, we saw what happened in Texas, for example.
Absolutely, the Texas freeze will have played a major part of the price, and it did. You saw it gap up on the very first trading session after the freeze was announced. I think America had 4 million barrels of oil per day taken offline. But interesting that you mentioned the Goldman Sachs, because I actually wrote on my LinkedIn about that as well. Their $75 Q3 forecast. Now,
Yeah.
it's not for me to say. There was a mention of Christmas bonuses, and that's how long it'll take. Are they trying to pump it up? But then to go back to this demand, Andrew, what some people may not realize is late in the Trump administration last year, we had the Saudi and Russia, conflict. We then had the global oil crisis where oil settled negative 37.63. So what Trump did, he organized, I think it's Dan Bruletti, to go and fill the SPR, but Congress didn't actually manage to fund this request. So what happened was companies like Total, Chevron, ExxonMobil, they actually rented a bit of space in the SPR. I say a bit, to the tune of 23 million barrels. And that oil needed to be withdrawn from the SPR by the 1st of March. So maybe some of the latter towards the back end of February, some of those larger draws that you've seen, I'm just unsure whether it was genuine demand or more the movement of inventory from one place to another that is now not recorded in this official statistic.
Right. Okay. I'm with you. Now we're looking at, once again, your amazing trading platform. We're looking at 67.42 for Brent oil futures as we speak. What would you suggest? What recommendations would you have in the near future for commodity traders, for oil traders, Richard?
So I do have to clarify that it's not my position to tell a trader what to do. I would always suggest that the standard things, do your own research. What I would always suggest you do, if you're going naked and you're going outright on a position, work the system, use the platform of markets.com, use our charts, use our stop loss tools. If you're trying to hedge it against something else, I had an old adage that I've said called, if you're not hedging, you're speculating. So I would always look at maybe trying to do something just to counter the effect of a potential, gapping up or down in the market. So use the tools available on the platform, use the research, use our X-ray, use wonderful podcasts like you do, Andrew, that provide free information. But ultimately, if I knew, Andrew, I wouldn't be sat here in my mum's house looking after her. I'd probably be on a beach in Fiji. So,
right, fair enough. What other commodity could we look at for potentially hedging oil in times like this, Richard? Gold, soft commodities, maybe?
Yeah, some people have said that before, gold, soft. I think it completely depends, Andrew, on what you're looking at doing. Are you a day trader? I come from an institutional background of corporate foreign exchange and corporate oil brokerage, whereby airlines, for example, will be hedging their exposure. So I think it actually pertains to the specific business itself as to how best mitigate your risk, and what your risk appetite is. I've dealt with multiple airlines from global to the slightly smaller niche ones. And ultimately, it's down to the risk appetite of the individual company. If you can forecast demand as much as you can, I would try and say, take as much risk off the table. But again, if you're a day trader, you might like, volatility is a trader's best friend. So it's not really for me to say. I would just suggest look at the countering products that we have on the platform. You've mentioned softs, you've mentioned gold, you've mentioned currencies, how it's more related to the, dollars are priced in oil. We've just had $1.9 trillion just magically appeared out of nowhere. So it's certainly going to be an exciting time for oil traders.
True, it will be indeed. Now, tonight we have the API. Tomorrow we have the crude oil inventories, and also tomorrow. Yeah, this week is a big week. We have the Fed week, and we have a Super Wednesday in the calendar and a Super Thursday. We have the Fed interest rate decision tomorrow. How will this affect the oil price, Richard? Will it have any impact on it?
Again, do you know what? By the time it gets to this stage, Andrew, for me, I think a lot of this movement is currently priced into the market already. I don't think anybody's expecting it to absolutely, roof or puke one way or the other. To be honest, it's a bit like non-farm payrolls. It used to be such a huge mover of the market, but now information's so much more available to so many more people via so many different mediums that often the institutions and the major players, which move with their large open interest positions, by the time it gets to Wednesday, Thursday. So maybe this rally that you've seen recently already prices in something that you and I don't know about, or that somebody has an axe, or somebody has a position in. But again, I'm not 100% sure, Andrew. I'm not a mind reader. I would just suggest that you use the products that we have, you use the stop loss tools, and you just manage that risk.
Right. Very well said. Very good recommendation. Richard, thank you ever so much for being with us today. Ladies, gentlemen, traders, we had with us Richard Rawlinson from the heart of London, global client champion at markets.com. Now, don't go anywhere. We're coming back live in a few minutes with the US markets open and top 5 things to know in the markets today. Stay tuned.
Go interactive with X-Ray, where we bring trading experts to you live in the platform. Choose sessions, watch live market analysis, and catch up on your favorite market insights anytime. Ask questions and go one-to-one with leading experts on gold, oil, FX, crypto, indices, and equities. X-Ray, your very own analysis team, right at your fingertips. That's higher trading from MarketsX. Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
Boom, and we're live. What's happening, beautiful people? Good morning, America. Good afternoon, Europe, and welcome everyone to our live stream. How are you guys doing? Let me know how you're doing in the comments box below. And if you like what we do here, or if you don't like what we do here, remember to like, share, subscribe, and support us in delivering more great content. Come on, be supportive. Don't be haters. Now, let's get down to business, people, and see what's happening in the markets on this beautiful Tuesday, March 16th, 2021. The Federal Reserve kicks off a two-day meeting today, and investors will be waiting for clues on the U.S. economic recovery plan. The vaccine crisis spreads in Europe, with more European countries giving up the AstraZeneca vaccine, adding pressure on Pfizer to deliver over 200 million doses in the second quarter as infections rates spiked again in many European countries. U.S. stock markets point to a mixed opening today, with a busy economic calendar disclosing retail sales data, industrial production, and business inventories on the U.S. Side of things. Crude oil prices dropped for a third day in a row ahead of the U.S. inventories, showing a double top around the 66.30 level and indicating to a potential weakness in the price. And Bitcoin pulls back to safety after pushing as high as $61,700 yesterday on the Bitfinex exchange. U.S. markets open. Coming up. Right. Good morning, America. Good afternoon, Europe. Once again, we're going to start with the economic calendar, see what happened on the markets today, guys. As you see, we started nice and early in the morning with data coming from Europe and UK. Okay, we saw mixed data in Europe. We saw the German ZEW current conditions and the economic sentiment coming out better than what consensus have predicted. 76.6 versus 74 on the German ZEW economic sentiment, and a negative 61 on the dot versus a negative 62 expected by consensus on the current conditions. Shortly after, we had the ZEW economic sentiment in the Eurozone, which again came out better than expected, 74.0. And a few minutes ago, we had the core retail sales, the export price index, import retail sales for February, foreign securities purchase on the Canadian dollar, and also industrial production, guys. In 38 minutes, we're going to have the business inventories and the retail inventories announced on the US dollar, followed by API weekly crude oil stock that will be announced just ahead midnight, GMT +2. Big day tomorrow in the economic calendar as well, guys. We're going to have the core CPI in the Eurozone at lunchtime, and in the afternoon, we're going to have building permits, housing starts, core CPI on the Canadian dollar, crude oil inventories, and brace for what follows after that, guys. We're going to have the interest rate projection for the first quarter. We're going to have the interest rate decision. We're going to have an FOMC statement and an FOMC press conference. So tomorrow afternoon, guys, tomorrow evening, brace for volatility on the US dollar against all its other peers, guys. Now, let's start with a very important news regarding the vaccine and Europe, guys. If you don't know by now, AstraZeneca vaccine was halted in most European countries after potential side effects were discovered last week, with blood clots being formed in some cases. This was denied by AstraZeneca and the World Health Organization, guys, suggesting that there's no connection, no direct link between the vaccine and the cases that had side effects. But let's see what's going to happen. So the headline today is European Union says Pfizer to deliver over 200 million vaccine doses in the second quarter. European Commission expects to receive more than 200 million doses of COVID-19 vaccine from Pfizer and BioNTech in the second quarter of the year, they said this morning, putting the European Union on course to meet its inoculation target. The European Union aims to vaccinate at least 255 million people, or about 70% of its adult population, by the end of this summer. It faced criticism of a slow rollout amid supply delays for some drug makers, hiccups in vaccination plans, and the suspension of inoculations using the AstraZeneca vaccine due to potential health issues. The new expected deliveries from Pfizer include the 10 million doses originally expected in the third and fourth quarters, the Commission said. These accelerated 10 million doses will bring the total doses of BioNTech Pfizer in quarter two up to over 200 million. EU Commissioner President Ursula von der Leyen said today, revealing for the first time the volume of doses expected from Pfizer in the April-June quarter. Pfizer this morning confirmed the EU statement regarding the second quarter supply as well. This is very good news. It gives member states room to maneuver and possibly fill gaps in deliveries, von der Leyen stated as well. The additional doses would be moved forward from an option of 100 million doses in a second contract the European Union signed in January with Pfizer and BioNTech, the EU statement said. In total, the European Union has booked 600 million doses from the two companies in two separate contracts. It is unclear whether this announcement could lead to changes in the EU's overall delivery forecast or not. The Commission said last week it expected 300 million doses in the second quarter from all the vaccine makers it had contracts with. The bloc in the second quarter expects also 55 million doses from Johnson & Johnson and 35 million from Moderna, according to a delivery schedule published by the Italian government and an internal document on supply forecast from Germany's health ministry. AstraZeneca last week announced it aimed to deliver to the 27 EU nation bloc over 70 million doses in the second quarter from its original contractual obligation of 180 million. What a turnover of things, guys. Who would have thought? Well, I was saying something along these lines a couple of months ago when the vaccines were supposed to be rolled out. I said they might be some side effects, and we won't know for sure if we get any side effects until the vaccines will be distributed to the population. Now, this is the news regarding the vaccine, guys. Europe is under pressure, on vaccine shortcuts, and also the news with AstraZeneca does not help anyone. Anyway, let's move on. Let's move on in about 30 seconds from now and see what else is happening in the markets today, as we are exactly 5 minutes ahead of the U.S. markets open. This week, they're going to open 1 hour earlier as the U.S. switched to the summertime. Stay tuned. We're coming back live in 30 seconds with the top 5 things to know in the markets today and the U.S. markets open.
Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
Right, good morning, people. Good afternoon, Europe, and welcome everyone to the U.S. markets open. These are the top 5 things to know in the markets today. Number 1 on the board, data dump as Federal Reserve meets. The Federal Reserve starts a 2-day policy meeting against the backdrop of a market that seems for now to have finished repricing its inflation expectations. The 10-year Treasury yield is steady at just over 1.6%. That may change its February's retail sales data, which also came out earlier on. And we see signs that U.S. consumers rushing to spend in anticipation of a latest round of stimulus checks. January's retail sales data had surprised sharply to the upside with a 5.3% gain, their biggest in 7 months, but analysts expect a 0.5% decline in February. Also due are industrial production data for February and the housing market index at 10 a.m. Eastern time. Number two on the board, guys. Europe's third COVID wave builds as AstraZeneca vaccine is suspended. A third wave of COVID-19 infections is building in Europe with Germany, France, Italy, and the Benelux countries all reporting rising infections. Germany's Robert Koch Institute said this morning that cases are again rising exponentially in the country. The situation isn't being helped by Europe's ongoing efforts to sabotage its own vaccination program. A German decision to stop distributing the AstraZeneca Oxford University vaccine yesterday led to France and Italy following shortly, with more countries announcing they halted the vaccination the last week. The Italian medicines regulator called it a political decision, while the European Medicines Agency, which is responsible for declaring medical products safe, repeated its opinion that the benefits of the vaccine outweigh any risks. Australia said it would distribute the AstraZeneca vaccine as planned, while Thailand's prime minister received a shot of the AstraZeneca vaccine on TV live as the country lifted the suspension it announced on Friday. Right, so good news on the horizon. Some bad news, some good news. The best news is that the World Health Organization announced there is no connection yet between the blood clots and the AstraZeneca vaccine. Right, now let's see what's happening with the U.S. stock markets today. Stocks are set to open mixed today in narrow ranges with traders content to await the retail sales data and the outcome of the Fed meeting. By 6:30 a.m. Eastern Time, the Dow Jones futures were down 67 points or 0.2%. The S&P 500 was down less than 0.1%, and the Nasdaq 100 was up 0.4%, extending yesterday's pattern of outperformance. Stocks likely to be in focus later include Facebook, which overnight reached a deal with the News Corp to pay for news in Australia, a precedent likely to have consequences in other countries too. Home builder Lennar will release earnings after the closing bell as well. Number 4 on the board, Xi calls for closure of loopholes benefiting tech giants. The Chinese president Xi Jinping reiterated the need for tighter regulation of the country's internet platform companies, stepping up a campaign that began late last year with the derailing of Ant Group's IPO. And number 5 on the board, oil inventories, guys. Crude oil prices continue to weaken ahead of the U.S. Inventory data later today from the American Petroleum Institute. By 6:30 a.m. Eastern Time, U.S. crude futures were down 1.5%, and Brent oil futures were down 1.6%, trading at around 67.79 a barrel. The U.S. inventory data have been highly volatile in the last couple of weeks due to effects from cold snap in Texas, where refineries were only able to reopen gradually after being completely closed by the extreme weather a couple of weeks ago. This week's data are likely to show an increase in final demand for refined products after the onset of the spring break drove U.S. air passenger numbers to their highest since the pandemic exploded last year. Well, still cautious is recommended, guys. Let's not jump the gun until we know exactly what's going to happen. Now, we are exactly at the U.S. markets open, guys. So welcome to the U.S. trading session, everyone. Let's have a quick look at the charts and see what is happening today at the U.S. markets open. Beautiful Tuesday, 16th of March, 2021. We're looking at crude oil WTI, guys, on a 60-minute chart, which is currently trading at $64.32 after dropping for the third session in a row. The price moved below the 200% moving average, which usually indicates a bit of selling power on the market, guys, with the RSI pointing downwards, indicating a potential downtrend. As we see in this case, the RSI is trading somewhere below the 50% mark, and usually that's a sign of weakness in the market. Now we see a bit of a push from the stochastic. On the other hand, however, I do have it set up on a lower time frame, so we're looking at this candlestick, the red candlestick that we see now, retracting a bit. Just at the US market open. Let's see what's going to happen. I have some signals ready for you guys. And if you want more signals, don't forget to get your trading signals from Markets X, guys, from markets.com. They have an amazing web platform that gives you the trading signals on the platform, including the source. Okay. So you can filter it by financial commentary that usually moves the markets on the short term, or you can filter it by signals, okay, which sometimes are really, really good. Yes, sometimes the markets are just unpredictable, but sometimes the signals they provide are really, really good. And guess what? They are provided straight on their trading platform. Okay, so there's no need for you to click left, click right, and choose your trading signals. Now, moving on, we're looking at mighty euro, guys, which is currently trading at 119.19 this afternoon after being rejected by that 200 moving average to the upside. We see RSI stochastic pointing downwards, indicating a bit of pressure on the euro side of things. However, okay, we saw the markets ranging during the European trading session today, and also they started ranging on, when was it? On the 11th, 5 days ago. Let's see, more potential to the downside than to the upside, unfortunately, due to the increasing number of COVID infections in Europe, and the rejection of most European countries of using the AstraZeneca vaccine. Moving on to the cable, GBP USD 138.85 this afternoon. We see a slight rejection of that 50 MA after a good rally of the pound on the European trading session. Okay, we're looking at the RSI stuck somewhere at the 50% level, somewhere there. Okay, if it's not going to exceed that level to the upside, guys, then probably we will continue the downtrend. Okay, for the pound. There is a bit of potential to the upside from stochastic, guys, on a 533 setup, still pointing upwards and not turning around just yet. Let's see what's going to happen. USD JPY 108.86 this afternoon with the RSI pointing downwards, and we might see a retest of that 200 moving average if this level will be broken. Okay, 108.51 on the radar for a potential correction. 108.86 the current market price, only 30 odd pips away, so don't be surprised if this is going to happen shortly after the US Open. The Aussie dollar is trading to the upside for the last few hours, 0.7746 against the US dollar. However, if we look at the RSI, guys, we can see it not being able to exceed the 50% mark, okay, which indicates at a continuation of the downtrend. Potentially also a lot of rejection happened here, okay, where the 200 moving average is. So let's see where these candlesticks will settle. Yeah, if they're gonna settle above the 200 MA or below. USD CAD, on the other hand, very quiet at the opening today. 124.64 for the USD CAD, with the RSI again in the lower section of the chart, currently trading at 43.2%, pointing downwards and indicating a potential sell position. Remember, what's worth noting, guys, is that the markets have not settled yet. Okay, and we also have quite a few announcements in the calendar. Let's see the opening today, guys. What's happening with the S&P and the Dow? Positive opening for the S&P, 3,972.53 this afternoon. No gap was noticed, so the S&P might continue the uptrend and might continue surprising everyone with its higher highs, well supported by the 50 MA and the 200 MA in the same time. Dow Jones Industrial opened mixed, opened to the downside, as we see. There we go, 5-minute chart. Okay, open to the downside. We see a negative opening, 32,907.56. Okay, with the RSI stochastic pointing downwards. So we might see some movement later on. We're looking at the US dollar index now, which opened mixed, 91.82 as we speak. A lot of uncertainty on the markets. There's more potential to the downside than to the upside, to be honest. Once again, we're looking at the RSI not being able to reach the highs again, and currently trading at the 51% mark. And stochastic is turning around on a 533 setup, indicating potential downtrend. Let's see what's happening with gold this afternoon. 1730.95 for gold futures this afternoon. Potential to the upside on this very shy uptrend that we see. The price is well supported by the 200 MA. So let's see what's going to happen from here. On a 1-hour chart, there we go. Yeah, we see the price settling well above the 200 MA. We see a gold cross being formed. Not a good rally for this formation just yet. So time will tell. All right, 67.96 for Brent oil futures after a correction of 100% lately, guys. A bit of weakness in the markets. Silver is pushing lower, 25.95, and it's currently pushing below that 200 moving average. And Bitcoin, guys, everyone's favorite, gave up on the tremendous rally that it had on Friday, guys, and it went all the way up to 61,700. And pulled back all the way down to 54 on the dot. Yeah, 54,002.1. Looking at it from a technical point of view, we see a dead cross to be formed between the 50 and the 200 MA, indicating a bit of weakness in the market. I would not be surprised if we're going to see Bitcoin trading even lower. Yeah, 50, maybe, who knows, maybe another 10,000 to the downside. 46, 47, somewhere there in that region. Right, Ethereum, guys. Let's see what's happening with Ethereum. Is doing basically the same thing as Bitcoin. Yeah, we saw a good push a couple of days ago. Yeah, followed by the asset giving back some gains, 1,782.03 for Ethereum. Still, the price is trading below the 200 MA on a 15-minute chart. On an hourly chart, we see the price pushing through that 200 MA to the downside. Okay, who knows? Maybe we see a bit of weakness in the markets, guys. Now, who is ready for some trading signals shortly after the U.S. markets open? Of course, you are. Now, gold, strong sell on a 5-minute chart, with the daily remaining a strong sell as well, and neutral and strong buy in between. Silver with 3 strong sell indications this afternoon. Copper, strong buy at the opening, followed by a strong sell on hourly, and the daily remains a strong buy as well. Mixed signals. US wheat, guys, is stuck in a strong sell on all 4 time frames. Let's have a quick look at it on markets.com trading platform. There we go. Okay, this is the US wheat. Let's change it to a 1-hour chart and see if we can get a better indication. Yes, this is the downtrend. As you see, I had this downtrend marked on the chart since last week, guys, since the downtrend started. And so far, so good. Yeah, the price is sticking to the downtrend. Looking at wheat from a different angle, we see a very important support level happening here around the 628.47. Okay, so we might see this downtrend continuing, somewhere there in that region. Now back to the trading signals, which are mixed, very mixed this afternoon on commodities. Let's have a quick look at Forex. Maybe we get a stronger indication, and there we go. Strong sell indication on all 4 timeframes for the euro this afternoon, guys, with the Europe struggling with the COVID infections and the vaccine. We see the pound with a strong buy recommendation on 2 out of the 4 timeframes. We see USD JPY with a strong sell on 3 timeframes, the daily remaining a strong buy. A lot of mixed signals on USD CHF and AUD USD. Euro GBP and USD CAD, 4 strong sell, red all over the charts. And towards the bottom, guys, we're looking at Euro CHF with strong sell recommendation on 3 out of 4 timeframes, and GBP CHF with strong buy on 3 out of the 4 timeframes. This is it. This is what's happening with the markets today, guys. Brace for volatility is the key word for tomorrow, as we're going to have a cascade of announcements coming from across the pond from US. We're going to have the interest rate decision. We're going to have the Fed meeting that kicked off today, and it's going to last for 2 days. This is it from my side today, guys. Join me again tomorrow, same time, same place, for another round of market talks. Until then, remember to trade responsibly, and may all your trades be